Hello class, this is Brian from FinancialTrainingSchool.com and welcome to GT212 Execution of Order Types. So this lesson is continuing onwards from GT104. From a definition point of view, what I taught there is valid, so you're expected to have that knowledge prior to watching this video. However, from a trading point of view, some of the examples I used may not have been correct. The reason being is because that lesson was made from my own prior trading experience. I didn't really do my research on the actual order types before I made the video. So some of the examples were made on the fly and some were from my own mistakes in the past. For example, I always thought of a stop loss order as a sell stop limit order, but apparently stop loss orders are simply stop orders. So it's just little things like that, not a big issue considering it was just the GT100 series. This is the GT200 series, so this lesson will have more comprehensive examples to make up for the minor screw up in GT104. And the reason why I've decided to make this lesson now is because I'm launching the new Forex series soon. So I need this lesson here to provide the background information for executing trades, since it will be a very crucial part for Forex trading and all of the other trading series to be released in the future as well. So let's get started on the examples. I will be using Paint and I will be going through 4 examples. So basically the 4 examples will be split into 2 long orders and 2 short orders. The left hand side will deal with the limit orders and the right hand side will deal with the stop orders. So let's start on the left hand side. So let's say price is currently moving down and we think that price is going to bounce at some point. So currently the market is above our level. So we would place a $5 buy limit order somewhere below the market price in anticipation that it would bounce on this level. So let's say it's a support level. So let's say it continues down, and then it reaches $5. At $5, we execute our $5 buy limit order. So now that we're in the trade, it can do one of 2 things. Either go up, which we hope it does, or it can go down. If it goes down, we would execute a sell stop order, which is a stop loss order. So this is the correction for my mistake earlier in GT104. So if it goes down, it continues going down past our support level, we would execute a $4 sell stop order down here to prevent any further losses, so that at this point it would execute a market order to sell to get rid of our position. Alternatively, if it goes up, then up here somewhere we would execute a $8 sell limit order so that we can exit our trade at that price, because we're projecting that the price, either the stock or whatever you're monitoring, could go up to $8 and then you exit at that price because that's the price that we want to sell at. And it's a limit order, so it only executes at that price. So obviously this example will be elaborated further in the Forex and the stock series, etc. later on. But depending on what broker or what instrument you're trading, you may or may not have these order types. If you're trading stocks, for example, I don't believe stocks have take profit or stop loss orders. So if you're trading a stock position, then you would have to place a single buy limit order and then a separate sell stop order and a sell limit order. Whereas on a Forex broker, you only have to enter a position once at a specific price, let's say a buy limit order, and then within that order you can also place a simultaneous take profit and stop loss order. So depending on what you're trading, you may mix them all up, or you have to separate each order and place them separately. So now on the flip side, for stop orders are placed above the market price. So let's say there's an ascending triangle. So let's say it looks like an ascending triangle and it breaks the resistance level. So it's going to go up and we're placing a buy stop order above the current market price, so that once it reaches $10, it's going to execute a buy order and we get into position. Now again, it can either do one of 2 things. It can either continue going up or it can go down. If it goes down, then like before, we have a sell stop order, which is a stop loss order to prevent any losses if it comes back down. So this is if it's a fake break of the ascending triangle. Or if it goes up, then just like before as well, we place a sell limit order, which is a take profit order. So this is what long orders look like depending on what you're trading. Like I said before, you may have the take profit orders or stop loss orders. If not, then you just have to place the 3 trades separately depending on the market conditions. You would place a limit order if the price is currently above your level, and you would place a stop order if the current market price is below your level. So this is the long orders. Now let's move on to the short orders, which is basically a mirror of what we just did. So let's say we have price is currently moving up and then it reaches some level up here, and we want to short the stock or the Forex pair or whatever it is. So let's say the current market price is down here. Our limit order is above the market price. Just like before, our buy limit was below the market price, sell limits are above the market price. And that's what I meant by the mirror. Everything we did with the buys, you just flip it around. Before we were below, now we're above. So the limit order is above the market price. So it goes up and it hits the $10 level. We execute the trade, so we get into our short order. And just like before, one of two things can happen. Either it can continue going up or it can go down. If it goes up, then we would execute a buy stop order to prevent any losses if it does go up. Or if it goes down, then we would execute a buy limit order. So this buy limit order is exactly the same as the previous buy limit order. The price of the limit order is below the market price. So now you can see the mirror directly. Sell limits are above the market price, buy limits are below the market price. So now on the other side, for stop orders. So let's say we have a descending triangle, it breaks the support level, and we're hoping that it continues going down. So we place a stop order below the market price, so that when price eventually hits our level, we enter our short position. Again, one of two things can happen. It can either go up, so meaning it's a false breakout, meaning the descending triangle wasn't good, so it goes up. We would have a buy stop order to prevent any losses to the upside. Or if it goes down, then we would have a buy limit order below the market price to execute a take profit. So this is how short orders work. Just like I said before, this is the flip side of the long orders. Whatever you do, just make sure that you're trading in the right direction and you have the appropriate orders in place. And like I said before, if you're trading Forex, then you have all three together in one order. But if you're trading stocks or something, you might have to place these three orders separately. So that's it for this lesson. Hope you guys enjoyed it, and I will see you guys next time.